Welcome to the TradeNeon YouTube channel. My name is Oliver Sparing and I warmly welcome you to this week's edition of our Level of Interest Market Briefing on Monday, May 18th, 2026. In this format, we take a look together at our morning level of interest market analysis in the ES futures markets and see what the S&P 500 has in store for us today and over the course of the week. I will show you how to apply level of interest in practice, find potential trading opportunities, and plan your trading day ahead. Last trading week was largely bullish, but it ended on Friday with a somewhat louder bang. The meeting between Donald Trump and his Chinese counterpart Xi Jinping did not produce any major insights, let alone any usable results. On the other hand, the saber rattling in the Iran conflict continues. The US and Israel have not ruled out a resumption of hostilities this week. The market reacted immediately and gave back Friday the gains from the previous two trading days. Today as well, the market is starting the session with a rather bearish tone, but more on that in a moment. First, as always, let's take a quick look at this week's news. We are dealing with a generally quiet week. The only notable events are the FOMC meeting minutes on Wednesday at 2 p.m. and the PMI data on Thursday at 9:45 a.m. Today, tomorrow and Friday are news-free days, which makes things easier for us as day traders, as we do not need to prepare for any major news events. In terms of earnings, there are only a few heavyweights reporting this week. First and foremost, Nvidia on Wednesday and Walmart on Thursday. In addition, Home Depot reports on Tuesday, Deere & Company on Thursday, TJX on Wednesday, and Analog Devices also on Wednesday. So once again this week, politics will most likely dominate market action and price will likely continue to react sensitively to news from conflict regions around the world. Despite the smaller current correction, however, we are still in a clear overaching uptrend. The market has confirmed its all-time high, accepted higher prices, and investors remain in a buying mood. Let's take a look at the chart. As I already mentioned, the market is starting the overnight session cautiously. The open took place directly at the previous day's low. The market briefly tested our triple confirmed level consisting of the settlement price, a dealer hedging level, and a dark pool level, clearly rejected it and is now consolidating below the previous day's low at the current monthly VWAP. Today's expected move has risen more noticeably again for the first time compared with last week, coming in at 57 points intraday. In the current market context, 57 points is not a large expected move, but it does show that uncertainty is increasing somewhat and that bearish moves cannot be ruled out. The weekly expected move has also risen sharply again to 126 points, pointing to a wider range in the coming week and a tendency toward potential downside corrections. Volant's dealer hedging data also confirms this picture at the current point in time. We are currently in an area where exposure is extremely low. Just above price, however, we find this connected cluster of negative gamma and Vanna exposure. This creates resistance from options market makers through selling based on Vanna as well as increased volatility based on gamma. Looking at the weekly picture confirms this view. This declining cumulative chart between 7,240 and 7,440 shows us from a broader perspective a clear high volatility area with selling pressure from option dealers. Also interesting is the view of the aggregate Greek trend down here on the bottom right. The positive Vanna exposure that formed between March and mid-April made a breakout of the market above the all-time high more likely. When implied volatility falls, positive Vanna exposure always forces dealers to support the market through buying. As we can see, however, the picture has shifted since mid-April and accordingly points to consolidation. Overall, we should therefore not necessarily expect new all-time highs today and should act cautiously. If the market breaks the expected move at 7,373 to the downside already in the pre-session, I would actually stay on the sidelines and trade again tomorrow. As a general rule of thumb, If the market breaks the expected move or the span interval already in the pre-session, this is a clear warning signal. Institutional traders may be confronted with margin calls based on their risk allocation, may need to reallocate and hedge, and this can lead to wild and sometimes arbitrary market movements. Anyone who still wants to trade in such a case should act more defensively and reduce position size. In the current environment, I see the greater opportunities on the short side, for example, on a pullback to the previous day's low or into this area here between 7,422 and 7,432, where in addition to the triple confirmed level already mentioned, we also have the lower edge of this Vanna bear zone. At the expected move, however, the market should find support. By this volume profile level at 7,363 points at the latest, the market should test this level and manage to move back above the expected move. A potential long entry would then definitely be conceivable, provided that a suitable setup forms here. Therefore, as always at this point, a reminder that level of interest only provides us with information about where institutional interest exists in the market and where it is therefore worth taking a closer look and searching for trade entries. We never simply place random limit orders at these levels and hope for the best. Instead, we always combine this analysis with a structured and statistically backtested trading system. The great thing is that level of interest can be adapted to and integrated into a wide variety of such systems in order to significantly improve conviction and hit rates. With level of interest, you can easily and conveniently synchronize our market analysis with your charting software. Whether you use TradingView, Bookmap, Atas, NinjaTrader, Quantower, or MetaTrader. For any further questions or suggestions, we are always happy to hear from you. Simply use the comments below this video. If you enjoyed the analysis, feel free to leave us a like. You can find more information about level of interest on our website TradeNeon.com. If you are interested in the highest quality dealer hedging data on the market, we highly recommend our colleagues at Volland. With our discount code TradeNeon, which you will also find in the description below, you receive a 10% discount on your subscription for the first 6 months. That's it from me for now. I wish you all a successful trading day, a good week, and I look forward to hearing from you again next week. Until then, take care and good trades.